So since I launched the video on bat formations, which is a Fibonacci ratio pattern, it just went nuts. Everyone really enjoyed that strategy, and you guys watched me place the trade at the airport. It paid for my upgrade on my first class ticket to Dubai. And since then, you guys have been messaging me saying, look, these are incredible. These patterns are incredible. And they are. And the truth of the matter is, the Forex market is in some form of consolidation around 70 to 80% of the time. So if you've got a strategy like what I'm going to show you here in your toolbox, you get more opportunity. And then what I'm going to show you is how to identify the really high probability ones that will then boost your profits even further. So I'm going to talk you through a bat pattern that I just took here literally yesterday. I launched my book yesterday. I had a big launch party, but in the morning I took this, went and done the launch, come back today, Friday. My mind's all over the place, but I'm just kind of closing off, looking at what's at play at the moment. And one of the setups that we took was a bat pattern. Now, just to remind you of the rules of that pattern, and you can go and watch the previous video where I go through it. I give you the download for all of the rules of engagement, but you can use this tool here. If you click over on the left and go to the XABCD pattern, what we're looking for is an impulse leg, and then we're looking for a 50% minimum retracement for the B leg, so that 0.5. Then we're looking for a 382 minimum for the C leg, right? So we wait for the 382 to be tested as a minimum. And then finally, we're looking for an 886 completion point from X to A. So up here would be the completion point, and that completes the pattern, right? As I say, if you want to go and see the rules of that in detail, go and watch the video here, and then come back to this one, and you can go and get the download of the strategy cheat sheet thing. But look, if you see what happened here on the Aussie CAD, this is one we was looking at this week. We had the X, we had the B, right? So we hit the 50% retracement. We didn't hit the 618, which is the rule. Otherwise, that turns it into a Gartley formation setup. And then we needed the 382, but not violate A, which we did, right? So we got this here for the C leg. And then the 886 completion was right here where my order is. Okay, so you can see that I took that order as a bat formation. So it's a set and forget. I could set a sell limit order. But what I was looking at in particular here was the 1 hour time frame. Okay, we approached that level of structure. If you look left, we had all this choppiness here, right? So we had a really strong level of resistance. And what I found is as we approached that level, RSI went overbought. See that? RSI went overbought. Now, conventionally, RSI is considered overbought at 70. I have it at 80 because I want that extreme filter because I use it for reversals. And you can see we was overbought. And what was even more interesting is once we went overbought, you also had this 3-bar reversal here, right? So some of you, if you're aggressive, you would have just entered at the end of this candle here. I was a bit more conservative, and I said, because this wasn't a conventional bat formation for me, I couldn't take it as a limit order. What I had to do was wait for confirmation, and the confirmation came in the form of this retest, this double top. See that? The second test didn't it tested the first high, but it didn't break and close above the first high, and we had divergence on the RSI. See that? Look at that. We went right back down. We had nice divergence on that second test, so we had equal tests of price, right? But divergence on the RSI. And what I found when I was testing these patterns way back in 2014 was that when you have a double top at the completion of the pattern, it actually increases the probability of the setup, like the strike rate, by 18.5%. And another fun fact is if you have an equal measured move at the completion point, that's a 19.5% increase. So this one had a double top at completion. So although I couldn't set and forget limit order on the pattern, I entered that market during my live trading session. I actually live streamed all this out to all my social media channels whilst I was taking the trade. About 9 a.m. I took the trade on the close of this candle here, and that just gives this pattern so much more of a high probability setup. Now you can see where my stop loss was. My stop loss was tight above the previous high. Because I didn't take this as a bat formation, I took it as a structure-based setup. I didn't need that 113 inversion-based stop. I actually used an ATR-based stop above this, but then I wanted to get above this high as well, just to give it that breathing room. And the reason I was able to do that, because my rules allowed me to do that, was because of the reward to risk profile. So the next thing is looking at the reward to risk profile. Now, I don't want to fight through all of this inside structure here. See this? Right? I don't want to push through this. I don't want to push through this. I don't want to push through this or this, right? So I just want my target at the maximum profit level, but the least stuff in the way between my entry and my target. Does that make sense? I don't want any support in the way of my entry and my target. Whereas if you look at the stop loss, I've got lots of stuff in the way, and that's what you want. You want lots of resistance in the way of your stop loss and your entry, but not a lot in the way of your entry and your target. And that is the optimal place for a target, whilst maximizing the reward to risk ratio. So this was about a 2-to-1. If I just bring on the short position here and go here, right? So this is about a 2-to-1 trade. Yeah, bang on a 2-to-1, right? So bang on a 2-to-1 and stand to make about £4,296 out of this trade. Looks like we're looking good. So we hovered around, had a bit of choppiness. There was a rejection candle here, and then we started to push down. Now we've had the retracement, and now it looks like we're in that run phase again. So no doubt, hopefully, this will trigger, and what a great way to end the week. So I don't know if I'll update this trade or I'll just put this out now, because as you know, I don't like hindsight stuff, only putting out the winners. You can follow along. I might even lose this trade, but we'll see. So if you want to learn more about these patterns, go to the other video where I go through all the rules. I'll give you a download for the cheat sheet of the whole pattern, or you can go to tier1trading.com and we'll teach you this pattern and loads of others. Oh, right. Quick update on this trade. I really wanted to get to this before it actually hit target so I could show you in real time. But I ended up holding this over the weekend. So it's now Monday. And it came down, looked like it was going well, then it pulled back a little bit, then it went right back up. And on Friday, the close, we were only about 1,000 in the green. We were in profit, but it just closed out around here. And then over Sunday, on the open, we pushed up, put in this new high, breaking this high, but it didn't stop me out, obviously. And then we had this second retest. Look at that. Another retest, and then just this morning, it just rolled over. And I was waiting for it, ready for it. I couldn't record it in time, unfortunately, but we rolled over and hit my targets just to prove that, you know, it wasn't. I did take a win. There's the P&L there. It was £4,296 and 32 pence. That was the trade, and now we're out of it. So yeah, if you want to learn more about these, all the links you need are in the description.